and welcome to this episode of Derek Invest. I'm your host, Derek Miller. What are we going to talk about today? Well, it looks like the U.S. stock markets are opening up this morning. The Nasdaq is up a little over 1%. The S&P is up almost 0.75%, and then the Dow's up. It looks like about 0.5%. And what we've been talking a lot about, and what we covered yesterday, was gaps in markets, okay? And what a gap in a market means. So if we're in a healthy rising market at the moment, if we have gap ups, they're going to fill. They're going to consistently reverse. So that means today we gap up 1%. We should reverse back through and then head back up if, in fact, we're healthy. And so we're going to look at that. But more importantly, we're going to look at that very briefly. We've been going over this stuff day after day now, I feel like, for maybe the last 6 sessions, because it's been really important. That's what you should be looking at, because if you're trading in what is going to become a very brutal downward trending market, I hope you know how to trade through that market. So right now that is the focus, but I want to jump over to the crypto universe, and I want to show you and talk about Bitcoin and the gaps we see over there and some of the other points to be made. We'll look at Bitcoin and Ethereum primarily because they trade most like a U.S. stock, most like the U.S. stock markets do. I mean, they trade like currencies. They're currencies. Well, Bitcoin is property, and then arguably basically the gold standard over there, so it's slightly different. But let's just, and Ethereum's a platform, but for now let's just call them currencies, because that's the way everybody treats them. We're going to take a look at them and how they're moving and what those movements can tell us about how they are attached to traditional finance in a lot of respects, or not attached to traditional finance, but those involved in traditional finance are absolutely over there moving that market, how they kind of correlate. So we're going to take a look at Bitcoin and Ethereum. And then what we want to do is, since we're looking at the markets, we're looking at the U.S. stock markets, we want to go ahead and we always want to look at the leader. That's the most important, and that's the Nasdaq right now. So we're going to take a look at a few companies over there. We'll look at Google, we'll look at Apple, we'll look at Amazon. Who else are we going to look at? We'll take a look at NVIDIA. And the reason we want to do that is because these are the leading stocks in the leading index, right? So, and then NVIDIA is part of the leading industry. So what we're really trying to discover here is there strength in those leaders that tells us there also is more strength in the index. And also we'll get some price targets out there and some target dates. So let's go ahead, let's jump over and take a look. The first thing we're going to take a look at is going to be crypto. Let's take a look at Bitcoin, and let's take a look at Ethereum and see what we can see over there. So if you remember, I'm gonna share my screen with you. If you remember, something that we have talked a lot about lately has been how tops are formed. Okay, and tops are formed over time, whereas bottoms are formed very, very quickly. And what I want to do is I want you to take a look now as we look at Bitcoin here. Let me stretch this out just a little bit. With Bitcoin, I'm just going to leave it on a weekly chart. That's all you need. It effectively goes back to 2018 as far as charting goes. So we don't need to go back much further than that. So if you can see, when we first started out in Bitcoin, I'll use some arrows. So when we first started out here and we got to this initial high, which was 2021, it didn't sit at the high. I mean, it sat at the high from what, February to May, I think, if I remember correctly. Here's February. What's this? May. So February to May, it sat at a high, and then it reversed, from wow, did it really hit 66,000? It hit 66,000, then it reversed back down to 30. In fact, it was a little lower, down to 28. Then it pulled back up where it only sat for about 3 months. Let's see, what's this? This is October of 21 to November of 21. So yeah, it was less than that. It was a month. And then it really yanked down, right? And so it got down to the 13s, 14s. I remember that distinctly. But what I want you to recognize is this, while other people, there's a double top, and that's how they'll refer it. What this really was is people were still nervous about Bitcoin that had ridden it up to 20,000 in, what was that, 2017, and that might have came into 2018. Then it reversed back down to almost 2,000. They got shaky. So when it came up here and started pulling down, it pulled down pretty significantly. I mean, it got cut in half. but it reversed right back up. This is really one long topping scenario, right? There were some traders that played down here at 30 and rode it back up, but very few. This was one long topping period. I mean, that's what it was, okay? So you're looking at February 21 to November of 21, where Bitcoin rode a high price of 66,000 or so. Okay, so we're looking at what? We're looking at 8 months there, 8-9 months. So you're looking at 8-9 months sitting at a top, and then it just reversed down to, like I said, it was what is the actual low here? We can look. The actual low is 14,925. So just under 15,000 is the actual low on Bitcoin. But to go from 68,000 to 15,000, pretty amazing. And it took 8 or 9 months of selling, primarily selling. The real selling was taking place up here. So you're really looking at about 6 months, because down here there were some traders playing. They were. So you're looking at about 6 months to pull it down, what, 75%? No, that's 66% roughly. So to pull it down 66%, well, I want to show you something. And I think that you should see, you should find some significance here, because we are now sitting up at this current price level, 64,000 or higher, in February until now. Roughly now. I know last week we went lower, but roughly right now, which is August. Okay. Tops take time. And traditionally, when you have a top and you see a lot of gaps downward, so it's being gapped down and then filling and then going lower, you're starting to get into an efficient market trend downward. The trend is starting to turn down. Now, let's go see if that's happening. So here we are. As you can see, gaps fill on this chart. All right. I'm just going to use arrows. Usually I'll do a circle for a gap, but you can see this gap here, which doesn't look like much. But if I expand this a bit, it wasn't nothing. There's a gap here. It comes down and fills. And that is the story of Bitcoin. I've looked at this chart plenty. Gaps here fill. Then you had a gap up. Now, see, a gap up is traditionally used to create a lot of excitement. Okay. So it'll gap up to get people fired up, and then prices will drop. So prices did drop pretty significantly. I didn't remember what did the low hit. 49,000. Low hit 49,000, and you have a pretty significant gap right here. Now, this is the part I don't like. The part I don't like is this gap fills. So this gap right here fills to right there. So you have a couple really strong indicators right now that you are at a high price that is going to experience a price drop. And then you also have something that you could argue, if you tried really hard, was good. And that's this giant amount of trading activity, which is the most you can find on this chart. And that trading activity, that volume, is on that low price. So it hit that low price and it bounced hard. So you can argue that that's a good thing. But let me show you something. If we zoom in just a little bit more on a 4-hour chart, it gaps down and it fills. That's what we just looked at, okay? And you can see this volume right here. But here's the scary part. With all of this volume, the gap came up, it filled the gap, and it reversed. Then it gapped down again, it filled, and it's reversing. This is not a good sign, okay? It's not. That, as far as a topping pattern would go, to have things gapping down massive amounts, by the way, from 64 to 49 or 62 to 49, it honestly doesn't matter. It was 20%. To have massive amounts of volume, then have it just bounce to where it gapped down and then having it reverse, that's not good. Okay. Now, if you want to say, well, where is price going? What you'll want to do is you'll want to continue to zoom in, and you want to make sure that all the gaps have filled, and they have. And then on this one, you're going to have to zoom out a little bit. All right. So let's zoom back out to a daily chart. Now, right now, what you would say is because we came down to about 49,000, and as you can see, that was the previous high. The fact that it's reversing means you're really right now, you're probably looking somewhere in there just to see if this was real. Just to see if this move down to 49,000, it was that as much supply as those that would like to purchase Bitcoin on the open market. Is that as much as they can come up with? Or can they buy more at 49? Can they buy more lower? Because right now, what I can tell you is that this market trend looks to be reversing. And when I say it looks to be reversing, this is a very, very strong topping reversal pattern. Now, you don't just come out and say, oh, we're going to reverse from, what's this, 670 what? High. So, oh, we're going to reverse from 74 down to 15, or we're going to reverse from 74 to 20. No. You have to watch momentum on the way down, especially in something as volatile as Bitcoin. Bitcoin is as volatile as any small cap stock in existence. So you have to pay attention to this thing. But what I can tell you is right now, people are going to set their level right here at this low, without a doubt. And that's 49,365. So you know you're going to break that. So right now, if you're a buyer only, and there's plenty of people in Bitcoin that are buyers only, they don't short. And there's plenty that do short, but you're definitely looking below that low, 49,365. You're looking down here somewhere. You're probably going to get right into there. And look, it can go a lot lower than that. As it gets there, that's when you're going to evaluate. As it gets there, that's when you're going to check it out, because that's where it's going. So you really are going to need to pay attention. So that's what Bitcoin looks like right now. And Bitcoin is moving similar to the US stock market. The only difference is it didn't make new highs after February. It sat there. Now, a lot of people are going to give you a lot of excuses about how the ETFs came out and that did this and that did that. Let me tell you something. Cash flow is all that matters in these markets. That is all that matters. And when you're moving cash out of something and you're a big holder, you're doing it at high prices and you're doing it slowly. This has happened in every asset class since the beginning of time, whether it was the great tulip bubble all the way to now. All right, this is how it works. And it's all based on cash flow. And now you're having gaps down. It's rallying, and there's small gaps throughout this rally to the downside, pulling up and then pulling back down. You have massive volume, massive trading activity on that drop last week, and it's not holding the price. It's not holding the price, which means they're going to retest this area down here somewhere. And most likely, they're going to come below the previous low, because that's just generally the way it works. Now, we're going to follow this on the way down, but I wanted to show you that in Bitcoin. Let's move over to Ethereum, because this is the platform or the other big crypto that everybody takes a look at. Now, this looks even weaker. Ethereum looks even weaker. And it looks weaker because it is making new lows. It is already back in that area that I'm pointing to with Bitcoin. It's already there. And let me tell you something. Bitcoin's your leader. Bitcoin is if you were talking about the U.S. stock market, the way I talk about the NASDAQ, because you have NVIDIA and all these semiconductors moving much higher and faster than your other stocks. So they're the leading industries. Well, in this market over here in crypto, your leading indexes, your leading industries are going to be Bitcoin and Ethereum. Bitcoin first, then Ethereum. Your platform is going to be a little weaker than your gold standard. And right now, your platform is not only is it not making new highs, Bitcoin can at least argue that it's holding its ground. Ethereum can't even argue that. It is all the way back. I mean, almost those lows. Remember those lows we were talking about in June of 21 before Bitcoin had popped back up? You're getting back into these areas, okay? Your weaker index or your weaker industries, many times, as long as they're part of the strength, and Ethereum's definitely part of the strength in crypto, if they're showing weakness, they will only be held there for so long, and then your leading indexes will follow, okay? So your leaders will lead and pull up. But once your lagging indexes, and if we start looking at coins, you'll see this very quickly. But we're not going to get into coins today. When your leading indexes start having too much drag on them, like Ethereum and a lot of these coins are giving a lot of drag right now, it will pull you down. So right now, I'm not telling you not to be optimistic about crypto in general, but if you are trading right now, as far as Ethereum goes, you're now going to look down into this area. Well, that might be a little too low. You'll come down into there to about 2,000. That's probably where you're looking right now, because it didn't even have the energy to fill this gap. And why didn't it have the energy to fill the gap? Because anybody look at this and tell me? Look at the volume on this. Look at the trading activity on Ethereum last week as compared to Bitcoin. There's not nearly as much, which is why I'm always telling you that Bitcoin's the gold standard. Bitcoin is what you need to watch. It's your leading index, so to speak, okay? That's where all the volume came. And that volume managed to give it a little drive. But the fact that the rest of this stuff can't catch up, the fact that it's not catching up, means it's gonna get pulled down. Okay, let's move on from this. Let's move over to the NASDAQ now. Let me check in with time. I just want to make sure I'm moving at a good pace here. Okay, yeah, we're doing all right. All right, so we're over on the NASDAQ. Right now, we're up 1.29% this morning. We're going to move in. As you can see, we talk about topping patterns taking time. That's not the case over here. This is a weekly chart. You only sat up here for 3 weeks, and then price got yanked down. That doesn't mean this can't turn into something, but what it does mean is that most likely we're going to see a run back up before we have any idea if a real reversal is going to occur. So let's take a look and see what we see here. We just looked at this stuff yesterday, so I'm not going to go through it too much. I walked through all these gaps yesterday and how they should fill and when they should fill. So what I want to do now is look at a couple or a few of the big stocks. Let's take a look at NVIDIA first and see if it looks strong or weak compared to its index. Well, in some ways, you could argue that it looks strong because it came up and made the previous high. It's already retesting the previous high, and that's always a positive sign. But let's zoom in just back to that weekly chart so you can see weekly to weekly. But if you look here, it sat up at this price level. What's that? That's June. Yeah, it's still not that long, June through July. And then it really pulled off. What you don't see here at these high prices is a lot of activity, a lot of volume, which could simply mean that in NVIDIA's case, there just wasn't a lot of interest in buying at this price, which is why price will get pulled down extremely hard. And it did, right? We all saw what happened. 140 to 90. Yeah, that's pretty strong. It's a pretty big price move. But there doesn't appear to be any real weakness in that weekly chart. Let's zoom in to a daily chart. What do we see? Again, up at these high prices, it's not like there's a lot of trading activity. It's just that there is not a lot of activity. There's a lack. It's lacking activity, actually. There's just not quite enough buying going on. And then you see these gaps on the way up. And what do I always tell you about gaps? Listen, especially in something being traded like NVIDIA, this stuff fills. It doesn't, when you saw this gap, if you didn't know if it was coming back down to this price, if you were unsure if it was coming back down to this price, you need to tune in a lot more to me. And you need to take a look at my mentorship course and consider doing some one-on-one sessions with me, because this was very easily identifiable. This was going to pull back. So what we're going to do right now is we're going to look up top here. We looked at the NASDAQ yesterday. Let's see if there's any gaps on the way down that have not filled, because that can be critical to us trying to decide, hey, is this a good place to buy? Should we be selling? What's the direction? So far, I would say NVIDIA looks positive. Now, what did we just talk about with gaps on the way down? When you're gapping down and filling, and then you're gapping down and filling, a lot of times this is an indication of a price reversal. That's just the way that goes. That can be a very big indication for a price reversal. Now, if we're looking at this price reversal compared to the NASDAQ. I don't like to overlap charts, by the way. You'll notice you'll never see me like overlay the NASDAQ on NVIDIA because I think that is that makes a true evaluation very difficult. But here we are, June 20th in 2024. That's when this market started to pull down. NVIDIA, the stock. That's when this stock started to pull down. So we come over to June 20th. Now, what were we just talking about when I said that when your leaders roll over, it'll pull your index with it, right? And the reversal is possible. If your index were to roll over, it can pull the leaders down as well. In this case, right here, let's get an arrow on that. Right here is where NVIDIA began to roll over. As you can see, the index, it still rose, beyond that point, but then it pulled down very, very hard. If you look at NVIDIA actually has a pattern that Elliott wave guys love because it looks like a trend reversal, okay? NVIDIA looks a lot more like a trend reversal, and I'll tell you why. Because it has a flowing pattern to it. You have wave one, wave two comes back up to wave one. Then you have strong wave threes. Now you could argue that this is the end of your wave three right here. This is your wave four. This is your wave five. And now you're going to rally A, B, C. And then you'll figure out if it's actually a trend reversal. But what I can tell you right now with NVIDIA is the way that it flowed down, and there wasn't a lot of stock picked up, and price has reversed. This doesn't have a huge a ton of trading activity, and it's still reversing up. Okay. You can see trading activity here. Now, where does it look like it's going to reverse to? Let's just keep zooming in a little bit. All right. No huge indicators here if you're being fair. You're going to have to look at this. Keep going. Keep going. Okay, so now what we're seeing is we're seeing some gap ups. See, we came into a 5-minute chart, and what are we seeing? We saw a gap up yesterday, and we see a gap up this morning. As I just discussed with you, for this to be a healthy rising market, and if you know how to properly manage risk and cash, you already know what you should be doing, right? So this gap right here is going to fill, because this is the same gap the underlying index has. And we've just gone through gaps and how they fill, and how they filled on this chart very efficiently. And they fill on most charts very efficiently. But there are some stocks and that they absolutely do not. But now you're seeing a gap down here at 104, 103. What is that? Yeah, 104. Call it 105. Like I always tell everybody, don't get greedy. You're seeing one at 105, and now you're seeing one up here at 110. Okay? So you have some area below you. Now, in a longer term time frame, let's see, I think this will get us back to where we can see the high. Yep, in a longer term time frame, you're really looking at 132. So if you're buying to the long side and also short term creating some shorts, whether that's via an index, whether that's via an option or whatever it may be, now you're managing risk. You're building to the long side, and you're probably doing that in the long-term portion of your portfolio. I'm sure if you're managing your money correctly, you have IRAs and you have some traditional accounts. And in your IRAs, you do most of your trading, and in your traditional accounts, you pay taxes. You want everything to exceed 12 months, so you're only paying 15% in capital gains. So if you own some NVIDIA, maybe you're buying a little more right now. Maybe you're buying the index a little bit more. And in the same note, you're creating some short positions in your short term, because you can see that short term we have some gaps to fill. All right, let's take a look at a few others. Let me see where we are. Time check. Yeah, I got to be fast here. So let's take a look at Apple. Apple, nothing exciting. A lot of strength. It didn't really even pull down with it pulled down with the NASDAQ, but there's a lot of strength there as compared to the NASDAQ itself, and it's already back to these previous highs. Let's see, is there a big giant gap there? Yep, and it filled, but there's only one. Let me zoom into a 1 hour. Yeah, Apple looks strong. Apple just, it looks like it's heading back. It'll head back up here to 233. It doesn't look like it has a lot standing in its way. It might be running out of a little bit of gas. And as I said, you have to pay attention to the index because the index now has over a 1% gap this morning. This may have it too. I'm pretty sure it does. Yeah. So this gap, you have to mind the gaps, folks. I tell everybody that all the time. Mind your gaps. Okay. We'll look at Amazon. Looks about the same. Google. There's nothing here showing incredible weakness. It pretty much is all falling in line with the index. But what is showing weakness, if you remember over in the crypto area, that's a little bit different, right? It made a high and it's been sitting there since February. And now you got a large pull down on volume. But the underlying crypto, which is Ethereum, it doesn't have the strength. All right, let's stop sharing here. I'm going to head back over. All right, everybody. I hope that was informative today. I'm going to start getting back into some other stocks tomorrow. We'll start looking at some other stocks that are trading. I hope this is helping you to identify a topping pattern and a bottoming pattern. There's so many ways that these play out, and they're very different, but they'll all have similar attributes, right? Like if you're one of my students, you understand kind of how this plays out a little bit, and you start to know how to read volume when there's really, really high volume and trading activity, how that footprint applies to almost having no footprint can really be an indication, because when there's no footprint, that means that institutional money, strong hands, not really interested in those prices, which that's something it looks like you saw in the video. Not so much something you saw on the index, right? And for you Bitcoin folks out there, I went through and showed you how that is very topping. It looks very toppish, but also it's not like there's a ton beneath you. And if you know where to set those targets, and a lot of you do, I can see a lot of trading. I see institutional footprints over there all over the place. There's really a lot of money to be made over there as well. And for you solid crypto guys who are like, look, I'm a buy only. I hold because I believe in this. Well, it's probably not a good time to buy, right? And I know you don't believe in that statement either, but I have to say it just the same. Hey, everybody, listen. Remember, if you're not good up here, you're not good anywhere. If you're having a bad day, get outside, look at the sunshine, put a smile on, fake it till you make it. Sometimes you have to do that, right? We all do. And remember, you haven't failed yet. How do I know that? Because you're still here. You're batting 1,000. You're still swinging the bat. All right, everybody. Thank you so much. And as always, remember, every day above ground is a good